Hello everyone, this is Tom Fox. I'm the Compliance Evangelist, and I'd like to welcome you to the October edition of 1 Month to a More Effective Compliance program. This is the only monthly compliance program focusing on a different subject, taking a deep dive so that it will help you have a more effective compliance program. This month, I will be talking about 1 month to more effective compliance for business ventures. But first, a word from this month's sponsor, the Volkov Law Group.
Hi, I'm Mike Volkov of the Volkov Law Group and proud sponsor of this month's podcast series. The Volkov Law Group believes that every company should have a robust ethics and compliance program. Experience and research show that ethical companies are better performers in the global marketplace. At ethical companies, employees believe in the company, they feel vested in the company, and are more productive. As a result, misconduct rates are much lower and financial performance is higher. We can help you achieve these benefits through an effective ethics and compliance program. The Volkov Law Group specializes in corporate compliance, internal investigations, and white-collar defense. We are your partners in our joint mission of building an effective ethical culture for your company. Our 10 years experience shows that business cultures can change. We are committed to work with you to achieve an ethical culture in your company. We address your company's anti-corruption, antitrust, trade and sanctions, anti-money laundering, and other regulatory and legal risks. We do this through practical guidance that your company can easily implement. You can learn more about our commitment to effective ethics and compliance programs at our website, www.volkovlaw.com, our award-winning blog, Corruption, Crime, and Compliance, and our new podcast series of the same name. You can contact me at my email address, mvolkov@volkovlaw.com. Let us know how we can help you achieve your goals.
Thank you, Michael. In this month's series, we will take a look at the role of compliance in mergers and acquisitions, the role of compliance in joint ventures, in joint venture agreements, distributorships, franchises, teaming agreements, partnerships, as well as other types of business relationships. At the end of October, you have an excellent grounding in what you need to do for a business venture under the FCPA. My 1 month series of 1 month to a more effective compliance program running through 2017 is a part of the Compliance Podcast Network. Day 12, Joint Venture Due Diligence. When you bring two entities together to operate jointly, there are several difficult issues to analyze. For the U.S. company operating under the FCPA, there must be an adequate business justification for a joint venture with a specific partner, all in writing and approved by an appropriate level of the organization. At this point, the U.S. company must engage in a due diligence review of the proposed joint venture partner. FCPA compliance expert Mike Volkov has noted this is where due diligence comes into play. The due diligence process should be built on similar principles, or principles similar to those involving third parties. The procedure should be robust, documented, and address all the potential risks involved. A business should use its due diligence review of the third-party partner to properly assess and uncover any corruption risk. Using this due diligence and its evaluation, you can then move forward to contractual certifications, representations, and warranties from a JV partner, or insist on other remedial measures to minimize the risks. So what are some of the things you should ask for in the due diligence review? And here I would like to call upon Dennis Haste, the General Counsel and Chief Compliance Officer at Steel Compliance Solutions, in an article he wrote entitled Guilt by Association, Transactional Joint Ventures in the FCPA, for some excellent information regarding what you need to ask for to begin due diligence. So Dennis breaks it down into 7 different parts, and I'm going to go through each one of these and describe what he has suggested you get. You will note in the show notes we have the full listing of this, so if you didn't pick it up in the podcast, you can certainly look at the show notes and the specific information is there. So entity information. You want the name, any DBAs, previous names, physical address, contact information, website address. Legal structure, jurisdiction of organization, when it was organized and where it's traded. Any entity registration number, dates and places of registration, number of years in business. If there's a tax license or a business license, you want to get copies of those. Description of the business, any customers and industry sectors. You want names and contact information for the main point of contact at your potential JV partner. And then you want some contact information for the entity's proposed JV partners, outside accountants and auditors, and primary legal contact. You're certainly going to want ownership information. This would include the name, address, nationality, and percentage ownership and acquisition of each parent, each person for the parent company, up to the ultimate parent. The name, nationality, and percentage ownership for all shareholders and owners. Identity of any other persons that have direct or indirect interest in the entity's equity, revenues, or profits. Identity of any person able to exercise control over the entity through an arrangement or relationship. Information on any direct or indirect ownership by a government employee or official, or that of a state-owned enterprise as well. Number 3, management information. Name, address, nationality for each of the entity's governing board, for each of the officers of the entity, for information on the business affiliations of the principals, owners, partners, directors, or key employees who will manage the business relationship, and any principals who have been public officials, candidates, political party members, work for state-owned enterprise. Number 4, government relationships. Here you need to take a look at information on the principals and whether or not they've held any government offices or they're holding government offices. Information on whether any owners, directors, etc. have an immediate family member who is a employer or official of a foreign government or of a state-owned enterprise. Information on whether an employee is a consultant to a government or state-owned enterprise. And then an approximate percentage of the entity's overall annual sales derived from government sales. Number 5 is business conduct. And here you want information on whether the entity has ever been barred or suspended from doing business with another government entity or a government entity. Information on whether the principals are identified on any governmental designated nationals, blocked persons, sanctions, embargoed, or denied persons lists. Information on whether any of these people are alleged to have or have been convicted of engaging in fraud, bribery, misrepresentation, or other criminal act. Information on whether the entity and its principals have ever been investigated for violating the FCPA or some other anti-corruption law. And then finally, information on whether the entity has a compliance program, which includes the prevention of bribery, and information on training of the employees. Number 6, references. You want 3 or more business references, unrelated, usually including a bank and an existing client. Then, of course, number 7, certifications, certification of accuracy, authorization to conduct due diligence, and collect data. And finally, an anti-corruption compliance declaration. In addition to asking for all of this information, you must take care to document the entire process that your company goes through in investigating and creating a joint venture. In other words, document, document, document. It is equally important to remember that obtaining this information is only one step. A company must evaluate the information and follow up if responses to such inquiries warrant further action. A paper program is simply not good enough and can lead to serious consequences if red flags are not reviewed and cleared. This evaluation should also be documented so that if a regulator ever comes knocking, you can demonstrate what you asked for, why, the response, your follow-up, and the details of your evaluation. And finally, never forget the human factor. It is important to perform in-person interviews of your proposed joint venture partner. It is important that you meet them, see their facilities, and assess them up close and personal. A U.S. business partner looking to engage a joint venture partner must consider the people who make up the joint venture partner. As compliance expert Mike Volkov has noted, these people in turn act together and can be influences together as part of the joint venture's culture. This is the human factor. A global company cannot ignore the human factor of its joint venture partner. It has to assess the culture and, more importantly, the key personnel who are part of the joint venture partner, the leaders, the go-to people who get the job done, and the overall environment to which they operate. As you have to mesh what may be two very different cultures and understandings and compliance, it is important to assess how your potential joint venture partner will take these obligations before rather than after you ink the JV agreement. So what are today's 3 key takeaways? Well, number 1, joint venture due diligence must focus on the unique joint venture risks, and that's why I went through that detailed list of documents and information to ask for. 2, ask for a detailed list of information from your joint venture partner. If they do not give it to you, do not walk away but run away, or if they push back. And finally, number 3, be sure to do an on-site investigation of your joint venture partner, focusing on the human element. This is Tom Fox. Thank you very much for listening to Day 12 of 1 month to more effective compliance for business ventures. And I hope you will join me tomorrow for Day 13. This is Tom Fox again. I'd like to thank you for listening to this episode of 1 month to more effective compliance for business ventures, and I hope you will join me again. If you have listened to this podcast on iTunes, I would greatly appreciate it if you would rate the podcast, as it would help in our rankings and help get the word out about the only daily podcast which will bring you a more effective compliance program. If you have any questions, you can email me at tfox@tfoxlaw.com. Once again, thanks to this month's sponsor, Mike Volkov at the Volkov Law Group. The podcast series, 1 month to a more effective compliance program, is a part of the Compliance Podcast Network. Please join us again.